Welcome to Tech Monetize Official, your source for smart money moves in a fast-changing world. Here, we break down the strategies and mindsets that separate legendary investors from the rest. Today, we're diving into the enduring wisdom of Warren Buffett, the Oracle of Omaha, whose influence on investing spans generations. Even after announcing his retirement in 2025, Buffett's every move is scrutinized, because his patient, disciplined approach has built over $160 billion in wealth. Investors and business leaders alike look to him for guidance, especially in uncertain times. He's not about chasing trends or risky bets. He's about understanding real business value and holding for the long term. Buffett's philosophy is rooted in deep research and a clear-eyed view of what makes a company truly valuable. In a world obsessed with crypto and AI, Buffett's principles, like seeking companies with strong brands and durable moats, remain timeless. He reminds us that technology may change, but sound investing principles endure. While others chase headlines, he focuses on businesses with predictable earnings and strong management. This focus helps him avoid the noise and stay committed to his strategy. Berkshire Hathaway's nearly 20% annual gain since 1965 isn't luck. It's discipline. It's the result of decades of consistent decision-making and a refusal to be swayed by market fads. Even as AI and digital currencies reshape industries, Buffett's core philosophy is an anchor. Behind every stock is a real business. He urges us to look past the hype and focus on fundamentals. He asks, does this company make something people need? Is it profitable? Can I understand it? These questions are simple, but powerful. By sticking to fundamentals, he avoids emotional investing and teaches us to do the same. Staying rational is key to long-term success. As we break down Berkshire's $259 billion portfolio, focus on the why behind each move, not just the stock names. Understanding the reasoning is what sets great investors apart. The goal isn't to copy Buffett, but to learn his mindset and build your own financial security. By applying these timeless lessons, you can chart a path toward lasting wealth and confidence in your financial future. In 2025, Buffett's main move was caution. He didn't buy a single new stock, even as the world watched for his next big play. The markets were roaring, hitting record highs and tempting investors everywhere to jump in. While others chased trends and poured money into hot stocks, Buffett held on to cash, signaling that he believed many stocks were overvalued and that patience is key to long-term success. Instead of buying, he focused on consolidation, trimming some positions, adding to others he trusts most, and making sure his portfolio reflected his highest convictions. He exited new holdings in Citigroup, reducing exposure to banking, and reallocated capital to higher conviction ideas, showing a willingness to adapt without chasing fads. He's adding to energy bets like Occidental Petroleum, doubling down on sectors he believes have long-term value. And he's boosting his stake in consumer brands like Domino's Pizza and Constellation brands, companies with strong, resilient business models. Meanwhile, he trimmed Bank of America, Capital One, Charter, and T-Mobile, carefully pruning his holdings, not overhauling them, but making thoughtful adjustments. This disciplined shuffle shows quiet confidence in his core beliefs and a focus on American companies with strong fundamentals, even when the market is noisy. He's playing defense, selectively bolstering offense and preparing Berkshire for the future, always thinking several moves ahead. It's steady-handed leadership, a lesson in patience, discipline, and the power of sticking to your principles for all investors. When Buffett increases a stake, it's a strong signal of conviction. In 2025, he built a massive position in Occidental Petroleum, betting on American energy and tangible assets. He also added to Domino's Pizza and Constellation brands, simple, resilient consumer businesses. These brands thrive on repeatable habits and steady cash flow, even in tough times. Less obvious, he increased holdings in Pool Corp and VeriSign, classic toll road businesses with recurring revenue and deep moats. Pool Corp profits from pool maintenance. VeriSign earns from every.com domain. Buffett's buying reinforces his philosophy focus on understandable, durable businesses with strong market positions. He's not chasing hype, he's doubling down on value and durability. For investors, the lesson is clear. Add to quality when the long-term story is intact. Stick with what you know and trust. Knowing when to sell is as important as knowing what to buy. In 2025, Buffett trimmed his stakes in Bank of America and Capital One, signaling caution in the banking sector. He fully exited Citigroup, continuing a trend of reducing financial exposure. He also trimmed Charter Communications and T-Mobile, wary of fierce competition and high capital costs. These moves aren't about losing faith. They're about risk management and rebalancing. Trimming winners keeps the portfolio balanced and frees up cash for better opportunities. Buffett's approach: don't fall in love with your stocks. Regularly review, trim when needed, and manage risk with discipline. Smart selling is as crucial as smart buying. At Berkshire's core are no-brainer stocks, companies with dominant positions and powerful brands. Apple tops the list, not just as a hardware maker, but as a sticky ecosystem with recurring revenue. Visa and MasterCard form a near duopoly in payments, acting as toll roads for global commerce. Amazon, once a missed opportunity, is now a core holding, thanks to its e-commerce dominance and AWS cloud engine. Coca-Cola and American Express are timeless classics, delivering steady dividends and global brand power. These holdings show Buffett's preference for businesses with strong moats and consistent cash flow. They're the bedrock of the portfolio, proving that great companies endure. The lesson: invest in what you understand and what stands the test of time. True quality never goes out of style. Buffett's 2025 strategy is all about consolidation, caution, and classic value. He's sitting on cash, waiting for great companies at fair prices instead of chasing expensive stocks. By refining his portfolio, adding to high-conviction holdings and trimming others, he's focusing on what he knows best. This reduces complexity and builds a robust, focused portfolio ready for economic storms. He's doubling down on American energy and enduring consumer brands. Above all, he sticks to value investing: strong earnings, low debt, great management, and sustainable advantages. PoolCorp and VeriSign aren't flashy, but they're profitable and dominant. In a speculative market, Buffett acts like a business owner, not a gambler. For investors, the message is clear: focus on quality, be patient, and wait for the right pitch. Sometimes the smartest move is to do nothing until the right opportunity comes. Buffett's honesty about mistakes is one of his greatest strengths. He missed Google despite seeing its power firsthand because he didn't fully understand the tech. He was late to Amazon, underestimating its moat and growth. By the time he bought in, much of the upside was gone. His worst deal? Buying Dexter shoe with Berkshire stock, an investment that quickly failed, costing billions in lost value. The lesson: always prioritize business quality over a cheap price. He also lost big on airlines during the pandemic, selling at a loss only to see stocks rebound. Even the best investors can be shaken by fear. These regrets teach us: stay curious, know your limits, and don't let emotion drive decisions. Learn from mistakes and focus on quality and conviction. Even legends are always learning. 2025's market is a frenzy. AI stocks and crypto are soaring, fueling speculation and sky-high valuations. Bitcoin has topped $118,000, and digital assets are everywhere. But Buffett remains skeptical. He invests in productive, cash-generating businesses, not speculative assets. The divide between value investing and digital speculation has never been wider. Add in global uncertainty, trade negotiations, Fed decisions, and tech earnings, and the market feels precarious. Buffett's defensive stance is a reminder: discipline matters most when everyone else is chasing hype. For investors, FOMO is real, but Buffett's approach is to stay focused on the proven and profitable. In wild markets, his caution is a lesson in staying grounded. What practical lessons can you take from Buffett's playbook? First, invest, don't speculate. Buffett's approach is about owning pieces of real businesses, not just trading stocks for quick profits. He believes in putting your money to work in companies that create value over time. Buy businesses you understand and want to own long-term. If you can't explain what a company does or how it makes money, it's probably not the right investment for you. Ask yourself, do I truly get how this company earns its profits? Can I see its business model working for years to come? Does it have a lasting edge over competitors? Is the price fair compared to its true value? These are questions Buffett always asks before investing. Embrace patience. Sometimes the best move is to wait for a great opportunity, even if it means doing nothing for a while. Build a watch list of companies you admire and let the market come to you. Don't chase trends or rush into decisions. Know your limits. Stick to your circle of competence, even if it means missing out on some gains. It's better to be safe than sorry. Focus on a few industries you truly understand and become an expert in those areas rather than spreading yourself too thin. Building wealth is a marathon, not a sprint. Buffett's success came from decades of consistency, discipline, and the magic of compounding returns. Start now. Be consistent and focus on quality investments. Even small steps today can lead to big results in the future. Tune out the noise and stay disciplined. Don't let market hype or fear drive your decisions. Stick to your plan. By thinking like Buffett, valuing patience, quality, and understanding, you can build real financial security and peace of mind for yourself and your family. Thanks for watching Tech Monetize Official. Subscribe for more insights and tips to help you on your financial journey.